Good morning, everybody. Today, I am going to talk about Aditya Birla Sunlife Mutual Fund Business Cycle Fund. It's a new NFO they have come out, which is already opened on 15th November, and this NFO will close on 29th November. It is called ABSL Business Cycle Fund. Now, I am going to tell you something about this fund and why we should invest in this fund. The name business cycle itself suggests the importance of this fund. What is business cycle? See, there are four stages, for any business. This thing. Before I proceed, I would like to give you some example on this. Just like we have got summer season, rainy season, autumn, winter, etc. Similarly, in business also, there are four type of seasons. Say for example, a peak level of operation is there. Then after that, some downfall will be there. Then some recovery will be there. Then after that, same peak level. So it goes on like a cycle. So investment is also done based on this cycle. So that is the main objective of this fund. That is what it is. It is named as ABSL Business Cycle Fund. This is a important, that is NFO, which is coming out from a very big and reputed mutual fund company. The NFO is already opened 15th November and it is going on, and it will go up to 29th November. Now I have told you about this, what is business cycle. Now how this fund operates. This fund operates based on the different business cycle. Now the period that we are undergoing after the COVID is a recovery stage. So there are a lot. So here the investment pattern definitely changes. See, there were a lot of ups and downs. Slowly the economy is growing. So in this situation, what type of investment that we are supposed to make? So the fund manager under the different business cycle selects the securities based on the existing, that is, economic conditions. That is called business cycle. Now I have told you something about what are the different type of business cycle that we have. How here the present situation is the recovery path that we are undergoing after the COVID. There are certain sectors, say for example, which is not at all affected by these business cycles. Say for example, FMCG, fast moving consumer goods. They are always stable, whatever the business cycle is there. But this is not so in the case of other sectors. Say for example, IT, say for example, infrastructure, say for example, banking and finance. So these sectors go on change. Now as far as the recovery stage, the present stage that we are undergoing, a huge scope exists for infrastructure. Under infrastructure, we have got cement, we have got iron ore, we have got steel industry. Then we have got other sectors such as IT, automobile and ancillary industries, where the growth opportunities are more. It is slowly picking up. So here this fund mainly concentrates on the investment in different cycles. So they select the stock accordingly and see to it that the wealth grows. This is the purpose of this fund. In a way, I can say, my opinion is that this can be also called as aggressive. That is, it can also be called as aggressive flexi cap fund. See, we have a flexi cap fund, but I am adding the word aggressive flexi cap fund. Under flexi cap fund, as I have already explained to you in my previous lectures, see, it is a combination of large cap, mid cap, small cap, that is Nifty 500. Here you have got the exposure of all that is sectors in the operating in the economy. So we have an advantage that you have an exposure to all type of performing companies in all sectors, large cap, mid cap and small cap. That's what I call it as. In a way, it can be considered as aggressive flexi cap fund. Now, as I have already told you, it works on business cycle. Now how the fund manager selects? So the fund manager has got full liberty to select, that is the fund, based on the present economic situation. Now so the fund manager can select the fund according to the present economic conditions. So he has got full freedom. That is advantage. Now, how the fund manager operates, how the funds are selected, how the investment is made. See, we call it as top down approach. Top to down approach. What is called top to down approach? Here, based on the business cycle, the sectors are selected. Once a sector is selected, the nature of companies and the companies that are there operating there, that also will be selected based on certain parameters. Then after that, again that is selection is made, and finally some 10 or 15 companies are selected, then investment is made. So based on the sectorial performance, based on the different sectors, top to down approach is being followed. So in a way, the fund manager has got good liberty, and he can select that is the companies based on the present conditions. So that is the advantage. That is an advantage of this fund. Now you can ask me whether any debt exposure is there in this fund. Definitely, I will say this is purely an equity fund. There cannot be any debt or liquid fund, but for the purpose of redemption, there will be some exposure in debt, but that is not that much. Now, sometimes you have a clarification or a doubt whether there is whether such fund can have exposure in international market. Yes, the provision is always there. Depending on the business cycle, they can also have exposure in international market. So these are the basic features of this fund. In a way, I can sum up that we can call it as an aggressive flexi cap fund. What we are doing in a flexi cap fund? We have got exposure in large cap, mid cap, and small cap. Similarly also, this NFO, this fund will also have such exposure based on the business cycle. So this is a very good, NFO is already open. Definitely everybody can have some exposure in this type of fund. If you got, I request you kindly go and take your advice from your advisors, then start investing in this fund. If you do not have that facility, definitely you can come to me. Once again, I introduce Subramanian, 9787552042. 9787552042. Definitely we will make this issue as a great success. Thank you very much.